Okay. Right. We're just about to kick off and start the live trading session and get ready for the report that is due out shortly from the FOMC report due out from America. It's due out in about 20 minutes, and that's the Federal Open Market Committee interest rate decision from USA. That's due out at 7 p.m. GMT plus 1, which is in about 20 minutes time. And as we know, this market can this report can affect all markets. So it can affect all markets that we are trading, whether it be the commodities market, the bond market, the commodities market, or the currency market, the Forex market. So you can expect this report to move all markets. Usually you also expect that more often than not, the markets tend to trend sideways prior to the report coming out. So again, we're just going to get ready for that. Okay, I'm just going to look I'm just going to look at the markets. We're just going to go through the markets and see what opportunities we have and get ready for the reports due out shortly. Let's just see if we can have I'll just go through all the markets one by one. This is the Dow Jones. I usually use a couple of strategies to trade. The lines you've seen on my chart, for instance, this green, yellow, and red lines are my pivot point lines. So I use the pivot point in terms of my day trading strategy. So I use the pivot point strategy. So that's one strategy I use to trade the markets, is using the pivot point strategy. And the other thing I use sometimes is the the moving average. So I use the moving average 50 also to trade sometimes. And then obviously I use things like the market support and the market resistance. So for instance, I've got this white line here, which is indicating the market support. And the market itself formed a bit of a resistance just above the first support. So this green line here is the pivot point first support, which is now acting as a resistance because it's above the market. So I've got a pending buy order just above the first support and also the market, so above the first support and also the market resistance. As you can see, my buy order is also just above the moving average 50. And then I'm also going to place a pending sell order just below the market support there. So 6748. So I tend to use a stop loss of 20 pips because I don't like to give the market my money. So I use a stop loss of 20 pips. And I've found over the years that's been more than sufficient for me. So that's the Dow Jones. So looking at the Euro-US dollar, I currently have a sell trade there from when the US GDP report was announced at 1:30. I sold below the first support using the pivot point strategy. So I'm currently in that trade. I've moved my stop to the opening level, so I'm not risking any money on that trade. And I've got a new pending buy order just above the first support in case the market reverses when the report is announced and goes up. So I've got that in place. Then from the dollar Swiss franc, you can see the market is now trending sideways around the second resistance. So I'm going to put a pending sell order just below the first resistance because that's now acting as a support. So that's 0.0982. So 9082 is just below the market support. And again, I use the 20 pips stop loss. So that'll be 20 pips above, which would be 0.9102. Oops. I also use a profit limit of 60 pips. I will come to that later. And then for the pound dollar, I have a swing trade on the pound dollar where I sold below the moving average from the daily chart. That's the blue line there indicating my moving average 50 from the daily time frame. So I'm in a swing trade from that. And then this is a new trade I've placed a pending buy order just above the first support, again, in case the market reverses when the report is announced. We can see from the euro yen, the market has taken off, which is the one that's just gone against the grain. It's taken off, and it's way beyond the second resistance, and it's gone all the way up. So for this, I'll use the moving average 50 strategy for this particular trade, because you can see it's gone way beyond the pivot point lines. So the strategy I'll be using here is that if the market falls on release of the report and breaks the moving average 50, I will sell. So I'll put my pending sell order just below the moving average 50, which is currently 137.56. So I'll put it below at 137.55. So that's 137.55. 137.75. Again, 20 pips stop loss. And then I'll just keep moving that along with the moving average. This is the oil. This is crude oil. This is all over the place, so there's really no pattern to that. It's just broken the first support. So I've missed that opportunity. And I don't mind missing that because I didn't want to place my orders too soon prior to the report coming out. So it's broken the first support. So the only available place to trade will be the pivot point to buy at the moment. I'll wait and see. Again, we've got a similar scenario with the New Zealand US dollar, New Zealand dollar US dollar, where the market has broken the first support and is currently just trending sideways along the first support. So it's broken the first support, it's just trending sideways along the first support. So the only available point here will be to buy above the pivot point. Again, I'll just wait and see how that pans out. Okay, so by and large, I'm all set. And we'll see what happens when the report is announced. It's quite interesting